Imagine stepping into the final stretch of a thrilling year where stock markets have been riding high, only to find everything hanging in a delicate balance as December looms. That's the pulse of Wall Street right now, where stock futures are barely budging, setting the stage for what could be a blockbuster end to 2025. Traders are buzzing with anticipation, ready to dive into the last month of the year, and if you're new to investing, this is your chance to grasp why these subtle shifts matter more than they might seem. But here's where it gets controversial. Is this stability a sign of calm confidence, or is it masking deeper uncertainties that could explode into volatility? Stick around, because the twists ahead might just challenge what you think you know about market moves. As Sunday night unfolded, stock futures showed minimal movement following a triumphant week, with investors bracing themselves for a potentially robust close to the year. Picture this, on the bustling floor of the New York Stock Exchange in New York City, where traders in suits and earpieces navigate the chaos, futures tied to major indices were holding steady, much like a ship waiting for the right tide. Specifically, Dow Jones Industrial Average futures dipped by just 18 points, while those linked to the S&P 500 and Nasdaq 100 lingered near unchanged levels. For beginners dipping their toes into the stock world, futures are essentially bets on where the market might head before official trading hours kick off. They are like preview trailers for the main event, giving insiders a glimpse of sentiment without the full spotlight. Monday ushers in December, and investors aren't short on positive vibes. Last week delivered some serious upward momentum, with the S&P 500 soaring by 3.7% and the Nasdaq Composite climbing an impressive 4.9%, while the Dow Jones Industrial Average added 3.2%. This kind of rally can feel exhilarating, especially if you're tracking your portfolio. It's a reminder that markets can recover quickly from dips, rewarding those who stay patient. And this is the part most people miss. Seasonality is playing its hand in favor of bulls on Wall Street. According to historical data from the Stock Traders Almanac, stretching back to 1950, the S&P 500 typically gains more than 1% in December, ranking it as the third strongest month for this benchmark index. To put that in perspective, think of it like holiday shopping seasons. People are more optimistic, spending freely, and that energy translates to buying stocks with a hopeful eye toward the new year. It's not a guarantee, of course, but these patterns offer a fascinating lens into how psychology and tradition influence trading. But let's flip the script and confront the turbulence that rocked November, a month that was far from smooth sailing. While the S&P 500 and Dow Jones Industrial Average finished flat for the period, the Nasdaq Composite dropped 1.5%, halting a 7-month winning streak. At its lowest point, the Nasdaq plunged nearly 8% from October's close, driven by worries over inflated valuations in artificial intelligence stocks. For newcomers, this highlights a key lesson. AI hype can supercharge gains, but when reality checks in, say, through slower-than-expected adoption or regulatory scrutiny, prices can tumble dramatically, pulling broader markets along. It's a classic case of euphoria meeting skepticism, and one that sparks debate. Are AI stocks overvalued bubbles waiting to burst, or are they the future engines of growth? In the midst of this, experts are weighing in with cautious optimism. Mark Newton, a technical strategist at Fundstrat, shared last week that he's leaning positive on December's outlook, thanks to the week's sharp rebound that boosted market breadth after November's rocky start. The equity market seems to be growing more comfortable, as the chances for a December rate cut have grown, he noted. For those unfamiliar, a rate cut by the Federal Reserve, potentially lowering interest rates to stimulate borrowing and spending, could ease pressures on stocks, making them more appealing. It's like giving the economy a gentle nudge, but as Newton implies, it's contingent on actual policy moves, not just rumors. 11 minutes ago. Wall Street gears up for the new month with a spark of momentum. Last week, the S&P 500 jumped 3.7%, the Nasdaq Composite soared 4.9%, and the Dow rose 3.2%. Seasonality favors gains, too. The S&P 500 has averaged over 1% in December since 1950, making it the third best month for the stock trader's almanac. Fred Imbert. 23 minutes ago. Stock futures kick off with minor shifts. What do you think? Will December live up to its seasonal reputation, or are those November jitters a harbinger of trouble? Do you believe AI valuations are overhyped, or are they poised for even bigger breakthroughs? Share your takes in the comments below. I'd love to hear if you're bullish, bearish, or somewhere in between. It could spark a lively debate on how we navigate these market mysteries.